Good day. My name is Mark Woodworth. I'm the president of PKF Hospitality Research. Welcome to another edition of Lodging Insights. Jack, welcome back. Good to have you.
Thanks, Mark.
Here in Atlanta. I know your second home. Today we are getting ready for the Masters, which is always a fun time and green time here in the South and so forth.
And the pollen side.
And the pollen side too. But we had the good fortune of presenting at the Hunter Conference last week here in Atlanta. And of the topics that I was able to cover, the one that seemed, Jack, to get the most response from the audience was when I covered what was going on in the development pipeline. We had current data as of the end of February from STR Inc., and that shows that the level of construction activity actually coming on the grounds is actually fairly elevated from a year ago. So, what I pointed out, perhaps even more importantly, is if you look at what's coming through the pipeline, and i.e. what's in the planning and the pre-planning stages, we're actually seeing year-over-year declines. So might this be a bulge that's working itself way through the pipeline or no? But overall, it's lingering in the air. Are we in danger of becoming overbuilt?
What have we seen in previous periods?
Well, if we go back to the previous peak in year-over-year supply growth, that actually occurred in the first quarter of 2009, where year-over-year it increased right at 3%. So we thought it'd be interesting to say, well, what was the volume of the pipeline leading up to the previous peak, and how does that compare to what we see today? And as we show in the graphic here, that the volume of activity that we're seeing, that we saw back then leading up to the previous peak, was a multiple of what we're seeing today. So the data suggests that, nothing to be concerned about. Supply growth really isn't that big a deal. Let's take that as being true. Jack, what's causing that?
Well, if you look at the literature on what the determinants are of supply growth, it breaks down into 5 categories: interest rates, construction costs, including land costs. It includes rental prices, or in our world, ADRs. It includes financing availability and also uncertainty. So let's take a look at those really quickly. Interest rates, I don't think anyone would disagree that interest rates are not a drag on supply growth right now, or are a drag on supply growth. And then the construction costs, I looked into that today, and land costs have been accelerating at a near double-digit rate, but the rest of the construction cost picture is pretty much under control. So what do you think? Do you think construction costs are a major drag on supply growth?
I think it's a headwind. I don't think it's at the point where you'd label it a major drag. No.
Right.
No.
And then real ADRs. Real ADRs are important, obviously, because without a substantial ADR, you don't have profitability in your development deals or a return on investor capital. We, of course, track 50 markets. We looked at the real ADRs today relative to previous peak. Only 6 of those markets have reached their previous peak. So there's still quite a few markets that need to get to what would be considered probably ADR feasibility.
Interesting. So wait a minute. So if your theory holds true, we should be seeing lots of construction activity in those 6 markets where real ADRs have recovered.
And we are. There are 3 of those markets that are within our top 5 in supply growth right now.
For the next 2 years
Pittsburgh
going
and
forward.
Austin,
Okay.
and some of the markets that you would expect.
Yeah.
What
about places like San Francisco and
Well, San Francisco is not in the top supply growth area, but it is a supply-constrained environment. It's just difficult to get entitlements and find sites
barriers
and that
to
sort
entry?
of barriers
Yeah.
to entry.
Got it. Okay.
And Oahu is another one of those
Yep.
in the same category. So then we looked at financing availability, and you can see from the graphic that's presented here that despite a lot of discussion at probably the Hunter Conference and elsewhere about increased financing availability, it's still way below what it was prior to the financial crisis and Great Recession. It's picked up some, but it's still not widely available as some might suspect. And then finally, uncertainty, which we've talked about many times before. We have looked at a composite uncertainty index that's produced for in the context of economic policy, and we can see in that chart that we've had quite a bit of a high level of
Really
uncertainty
elevated,
which has now come down recently, but it certainly explains why people might hesitate to put their
Yeah,
projects
in fact,
forward.
it's now, it's back down to where we saw before the Great Recession started. So that would suggest that there's perhaps more confidence in making what clearly is going to be a long-term commitment to start
Right.
building a new hotel.
So to summarize, I think we're waiting for real ADRs to return. We're waiting for financing availability to be more widespread, and we're hoping for continual declines in this uncertainty index to give people confidence.
And looking at our current forecast, that's an outlook that we think is going to persist at least for another couple of years.
Yep.
We just don't see those factors either dissipating or coming into place that will lead to being concerned about too much too soon in the way of new supply.
Yep.
So that's our current thinking on that topic. Thanks for your time, and Jack, again, thanks for your insights.
Absolutely,
and
Mark.
we appreciate you spending part of your day listening to Lodging Insights. Thanks.
Bye.
Sponsored by PKF Consulting. To learn more about market and feasibility studies, appraisals, and other consulting services, please visit www.pkfc.com.